Hello, this is Terry Roggensack coming to you from the CME Group trading floor. Today we want to talk a little bit about the hog market. Are we at a near-term top? Number one factor is that seasonally we peak in pork product prices about this time of the year, right into the early part of July as a possibility. And we also see a seasonal low in production about this time of the year. For the rest of the year, we see a low in the weekly production right into the 4th of July weekend. The second factor when you're looking for a near-term top, perhaps news that the U.S. pork is on the list for tariffs that China is going to charge extra for, and plus the trade escalation that we've seen in recent days with China and the U.S. coming back at each other with larger and larger tariff lists, that could cause a factor psychologically to help put in a near-term top. We'd point out that Mexico, China, and Canada represent 50% of the total exports for the U.S. pork industry. We'd also point out that exports represent 25% of total production in the U.S. So we're certainly in a situation where with Mexico and China, both with significant tariff threats, that we could see exports drop off dramatically in the second half of the year. Third factor is that production looks like it's on the rise for the second half of the year. Third quarter pork production expected to be a record high and up 4.2% from last year. Fourth quarter pork production expected to be a record high and up 5.7% from last year. If the exports do slow in the second half of the year, that will mean U.S. consumers will have more pork to absorb. Typically, that would mean lower prices will be necessary to absorb that pork. We'd take a look at selling August hogs 78.80 area, looking for an objective of 73.40, a risk a total of 100 points on the trade. Again, might look to sell August hogs 78.80. This is Terry Roggensack coming to you from the CME Group trading floor.